Hello, 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 hello. Good morning. Welcome to the Buying a Home in The Hague, or Den Haag, as we say it in the Netherlands, webinar. Normally we wait a few minutes to give everybody a chance to join, but I think that is fine by now. So let's give this a go. Who am I? My name is Kimo Paula. I'm half Dutch, half Caribbean. I'm a proud father of a daughter who's 4, but thinks that she's 16, so that's always fun. I bought my own home 5 years ago. I wasn't supporting anyone with buying a home, or we weren't supporting anyone buying a home. So what did I know? 2 years later, we actually started with this business unit. Back then, we were only supporting people with finding a home to rent. So it took me a while to get my offer accepted. It was a very busy, very competitive market back then, no different from what it is today. But had I known then what I know now, oh, things would have looked so much different. So my goal today is to share information with you and hopefully make sure you don't make the same mistakes that I made. We'll talk a little bit about the introduction of EHN and the mind state of getting in this market, what you need in savings, and 3 tips to win. And then we'll talk high level about the timeline. First, a little bit more about the EHN. Greatness is achieved in the agency of others, I believe. So if you decide to move forward with us and work with one of us, then you'll most likely not work with me, but with one of my colleagues. As you can see, they either are from abroad or have lived abroad. They have a lot of experience by now with helping people secure a home. They've bought their own homes and they've supported many clients with securing their home in the Netherlands. What else? We are not traditional real estate agents. So we are not the guys in suits that drive around on the scooters doing deals and moving bricks and so on. No, we're here to actually make sure that you have a pretty good experience and that we can actually secure a property for you. We also only help with buying and renting. We don't do selling. We don't do letting of properties. So that means that we're very much focused on finding homes and securing homes and not distracted by people that want to sell a property, which in this market is the easier way out. So what we've decided is to focus and make sure that we've become pretty good at securing homes and actually building the network. We charge a fixed fee, no commissions. We'll talk a little bit about that later. And we know what it's like to settle into a new country and set up a new home. So we can actually guide you through that process. Of course, we have some added values. What is the added value? Well, selling agents take our offers more seriously. They actually consider us to have done the due diligence on your behalf, so you're more serious about the offer as well. We can sometimes book in viewings when it's no longer possible, and we can support by reviewing those legal documents. One of the most important things is we actually define the market value range with market data. There's plenty of tools out there that can help you with that as well, but they're not as accurate as we are, and that definitely makes a difference because 5,000 euros in difference can make or break your offer. And we'll inform you about the rules and regulations. By the way, if you have any questions, pop them in the chats, right? I can see the chat. I can't see the Q&A because then I have to stop sharing my screen, but I can see the chat. I'm not sure why that is, but that is the case. So if you have any questions, comments, or remarks, or things you'd like to know, pop them in the chat. Let's move on. Of course, I will make sure you don't make the same mistakes that we've made. So I'm very curious to hear from you guys, where in the process you are. Are you in the orientation stage? Have you started searching? Have you actually viewed properties, or have you submitted an offer and maybe even got your offer accepted? So maybe pop it in the chat. That gives me a little bit more of an idea of where you are in the process. Okay, while you guys share it in the chat, I'm going to talk a little bit more about the mind state. So the market is going up. You can see that. And you can hear that. I think that the majority of you have read some news articles as well where the prices are going up. Let me share a little bit more about numbers, and then I'll share a little bit more about why the prices are going up and why we expect them not to go down anytime soon. But first, last quarter, they're currently actually for sale 1,904 properties, 40 properties. This average housing price was about 439, and the date of sales was 15 days. So from the moment it went on Funda to the moment it actually was sold, 15 days. That's quick. That doesn't sometimes even allow you to go there a second time, right? So what I still find amazing is that you spend this much money and you've only seen the place once. We would always advise you to go there a second time if possible, or after the offer accepted. We'll talk about that a little bit later. By the way, the majority of you are in the orientation stage, which is great because that means that I'll be able to add some value to you today. Then looking at the property development when it comes to pricing, we've seen a bit of a dip after 2008. That persisted until 2013-14, and then we had a steady increase of housing prices. And I probably, if you like add another dot here to 2022, that will go up even steeper. So the market prices are going up, but we get a lot of questions like, am I buying at the right time? Is this a good time to buy or not, or buying at the peak? It's good to understand why the prices are going up and what kind of like the trajectory will be for the next foreseeable future. Let me first start by saying that fiscal benefits and the fiscal policy that the government has created creates a high demand on the buying market. One is tax exemption. There are two groups. You have the group that is below 35 and buys up to 400,000 euros. You have the group that is 35 years or older or buys a property of more than 400,000 euros. This first group doesn't have to pay transfer tax, which is 2% of the purchase price. This group, sorry, you have to pay transfer tax. And this is a new law starting this year. If you're 34 years or younger, if you buy a property up to 400,000 euros and you haven't used that exemption before, you don't have to pay transfer tax. What we're seeing though is that the people that use the 2%, they put it back into the offer. So the prices go up because of that. The other thing is interest rebate. So it's very attractive to have a mortgage because mortgage rates are low. It's cheap to borrow money. It's not free. Take it. It's not free. It's cheap. And you can actually deduct the interest that you're paying over your mortgage off your taxable income at the end of the year. So you get about 30% of that back. So let's say you have a mortgage rate of 1.6%, then multiply that by 30% that you'll get back, then you end up spending, I have to do math, right? 4, 5, 8. So then you'll spend close to 1%, so 1.02 if I'm correct, on a mortgage interest instead of the 1.6. So that definitely makes a difference, right? Then let's go to the next one, which is no capital gain. So let's say you buy a property, you make a profit because it increased in value and you've of course paid off your mortgage and you sell that property. The money that you've earned is not taxable. So you can actually put that back into a new property or do like buy a boat or something like that. But what we're seeing is that a lot of that money is being put back into the housing market. So again, the prices will continue to go up. There's one more that I should actually add here, and that is that a lot of parents are gifting their kids up to 100K tax-free if they can put it into property. So we're seeing old money transfer to younger kids that can actually put it into property, and that is also flowing the market in that sense. Then don't forget about low interest rates, 1.5 to 2%. So they're historically low, and the rents are historically high, right? So be mindful that because of that, a lot of people are going from, hey, I'm renting now to it might be useful to buy. And I completely understand that. But because the supply is lacking behind, we're seeing a bigger discrepancy in supply and demand. Demand is high, supply doesn't grow as quickly as the demand by far. We have a very strong track record of not meeting our quota. So that means that there's more pressure on the housing market. I think that the other month I read there's 1.2 properties available per home searcher. So that means that you'll see a lot of properties, but you technically don't have the option of a lot of properties. So that is technically what's driving the prices up. And this is not going to change because when it comes to fiscal benefits, the current government is quite liberal and their constituency consists of homeowners or home buyers. So they're not going to change those rules. They're very hesitant to do that. Low interest rates, I don't see that happening either. I think that currently interest rates will be low. Central banks are not going to change that anytime soon. I'm not sure what's going to happen if inflation increases. I am not a macroeconomist. So, by the way, I'm not a financial expert either. So, I have my ideas and opinions and based on experience and what I see happening in the world, but still, it's very difficult to gauge where we'll be a year or 2 years from now. But I don't consider housing prices to drop anytime soon. They expect double-digit increases next year, and then most likely either single-digit or even double-digit the year thereafter. It's not going to slow down. COVID has also increased the popularity of actually going and owning a home and maybe having a bit of a bigger home. So now you know that the market is hot and it's not going to cool off anytime soon. Of course, I must say there's always kind of like something to be mindful and careful of course, is that from a macroeconomic point of view, it's very difficult to gauge the future. Evergrande is still kind of like hanging over our heads. We don't know what's going to happen there. But again, I I think that we'll be able to kind of like have another increase in the next 2 or 3 years. What would you need in savings to actually kickstart this process? So we made a little list for you guys, and the top one is transfer tax. But we have, again, the group 34 years or younger buying up to 400K, the group 35 years or older and buying above 400K. You guys, sorry, have to pay transfer tax. You guys are transfer tax free, so you have to pay 2%, you have to pay 0%. In total, this amount of cost to actually secure a property is about 3 to 5%. So for the group that doesn't pay transfer tax, it's 3%. For the group that has to pay transfer tax, it's close to 5% of the purchase price. What we've done in the third column is, and by the way, this presentation will be shared with you guys. You don't need to make any notes. What we've done in the third column is say whether the amounts here are tax deductible. So can you deduct them off your taxable income at the end of the year? Again, you get money back. This is only relevant for mortgage related costs. So the notary that drops the mortgage deed, the bank or the mortgage broker that sets up your mortgage, the appraiser that the bank requires to approve your mortgage. All of these things are mortgage related, so you can actually take this money and deduct it off your taxable income at the end of the year. So this is what you would need in savings to actually start. It's not what you need to kind of like pay at the beginning. Most likely you'll pay majority of these amounts when you actually get the keys to the property or the day before. So if you have this in savings, that's great. If you don't have it in savings yet, start saving some more money. I got a question. Is it true that your appraisal has been changed with month and the price of inspection would increase? Yes, most likely we'll see the value of the appraiser increase or the cost increase because they've made it a little bit more tricky and difficult to do the appraisal reports. So we're closer to 650, 700 euros now, but it differs a little bit per appraiser. Thanks for the question, Roberto. Then several tips to win in the current market. Let's first start with value, 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 value. Why is value so important? Because of the following. Let me give you 2 examples. This property is worth 300 or is actually on the market for 395,000 euros. So the asking price, asking price is 395. Then let's look at this overview. The asking price is 395, but the asking price is the amount that the selling agent puts the property up for. He's very free when it comes to that. He can put it up for 395, 410, 375, so on. The market value, however, doesn't change, right? The market value is based on similar properties sold in an area that are sold in the last 6 to 12 months and that are similar. So you can't compare a property that's 100 square meters to a property that's 50 square meters. So same size, same setup, same floor, and so on. So the market value of this property is 415. You will get this amount from the bank, no penny higher, unless you do renovations and stuff like that. That's a different story. But this is the amount that the bank will give you at max. Of course, if your salary is high enough to actually get this amount. Let's say 395 is the asking price. 415 is the value of the property. Somebody submits 435 and gets a property. Congratulations. The difference between asking price and purchase price is 40K, about 10%. The difference between value and purchase price is about 5%. Let's look at the second example. Another agent puts the asking price up for 375. Same property, 375. Market value doesn't change. Somebody offers 435, but now suddenly from 10%, we go to a difference of 16%. If everybody starts using the narrative, hey, you have to offer this much over the asking price, then people will start using the 60% narrative, which is not the right narrative. Look at market value, because if you offer 16% over this one, you're closer to 460 that you would offer. If you offer for 16% over this one, you're closer to 435. So what I would urge you to do is look at market value. How do we do that? How do we define market value? Like I said, comparable properties sold in the last 6 to 12 months in a similar neighborhood. So we can support you with that. You can also look it up. Let me add it. Kadaster, Darnell, and Walter Living. So you can look up the values there as well, but they won't give you the accurate value of your property. They're often off by 10 to 15%, but they'll tell you a little bit more about properties sold in the neighborhood. So no, don't look at asking price, look at market value. That's the first thing, because it's going to help you with your offer. And of course, you want to know what the difference is that you have to put up in cash if you all overbid over the market value. If you've got this wrong, let me give you an example. Let's say you submit an offer of 450,000 euros, but you only have 20K in savings. Then technically the bank will give you this. You should be offering this, but if you offer more, and the agent finds out, he's not going to accept your offer. So be realistic. We'll talk about the winning offer now. A winning offer is a high price, it's a good price, but it's not always the highest price. Like I mentioned, don't offer a crazy amount over the actual value of the property if you can't support it with your own cash, right? Letting agents will find out about that and they will not accept your offer. So offer a good, realistic price, but don't offer the highest price necessarily. Offer security to the seller. The seller will want to move forward with the deal. He will not want to know a month or 2 months in that he can't move forward because you pulled out. There's two clauses that allow you to pull out technically. One is a finance clause. If you don't get your mortgage, you can pull out, which technically gives you 4 weeks after you sign a bridge contract to pull out. And there's another technical inspection clause. If a technical inspection comes in and you're not happy with the results, then you can pull out as well. In both cases, the seller will not know until those clauses expire whether you're going to move forward. So balance that out, right? Be sure what you want to put in and what you can take out. Also offer the least amount of hassle. I think one of the biggest examples is, let's say the seller wants to move out the 1st of February and you want the seller to move out the 1st of January because you have maybe terminated your lease and you want to move in. Then you'll give a lot of hassle to the selling party because the selling party would need to move out, store his stuff, find temporary accommodation, and then move back into his new home afterwards. So make sure you don't give too much hassle to the seller. Be accommodating because it's a big purchase and you want to make sure you actually get the property. And then last but not least, offer a personal touch. Share a little bit more about yourself. Add like a doc with a photo, with some text, why you love the property, who you are, and so on, because that's definitely going to help out, especially if you're competing with so this is you, and you're competing with a investor who wants to buy it and rent it out. Then most likely, especially if the landlord has lived or the seller has lived in the property himself, they will go for your offer. By the way, a question from Lily Rose. With respect to savings, how much would one need? So Lily Rose, depending on how old you are, if you're 34 years or younger and you're buying a property up to 400,000 euros, then you need 3% of the bridge price. If you're 35 years or older and you're buying a property of more than, or you're buying a property of more than 400,000 euros, you need 5% of the bridge price. So have a look at that. Hope that answers your question a little bit. Then this was actually an example to say, let's say you offer crazy and you don't give. Roberto B asks 5 or 8%. So bridge price, the bridge costs are 5% if you have to pay transfer tax. If you don't pay transfer tax, they're 3%. By the way, that's a rough calculation, right? Because some of these costs are fixed, some of the costs are variable. Then the last but not least, due diligence, very, very important. So we have a technical inspector. The technical inspector comes in to inspect the property and see if it actually needs maintenance, if something needs to be fixed, how much that will cost, and so on. The appraiser comes in to value the property. So if you work with us, what we do is we give you a valuation range. So let's look at the other property. It was 395. Let's say we valued it at anywhere between 440 and 455. That's a valuation range. The bank doesn't appreciate the valuation range because they know that we're biased, right? The selling party can't also share the value because they know they're also biased. So what happens is some independent party, in this case, the appraiser, goes in. He's not completely unbiased because you pay for him, right? So he goes in, but he has to share his report with an institute that checks if he plays by the rules. If he has, then they'll send it to the bank, and that's the value of the property. We've been very spot on. I think we have a 99% accuracy rate in that sense. So we're very close to getting the actual value right that the appraiser gets. My question to you guys is, do you book these guys in before or after your offer is accepted? So do you book the appraiser and the technical inspector in before or after your offer is accepted? Barry says after. Who confirms after or before? So do you book the technical inspector in before or after your offer is accepted? The same thing for the appraiser, before or after your offer is accepted. Another after for Nesma. After? No befores? Okay. Well, you got it right, because let's say you book them before your offer is accepted and your offer is not accepted, you've lost money. It's a bit of a trick question because when your offer is accepted, doesn't mean you're committed yet, right? So I know that you want to have as much information as possible about that property before you know if you want to move forward, but the day that you have to move forward is closer to the bridge contract signing date. So let me first give you a little bit of time when it comes to the timeline. So the offer is accepted. Let's say it's today, Thursday, the 14th. Then you have about a week and a half to sign the bridge contract. So that would be what is it? Monday, the 10 days, well, Monday the 24th, right? Then once the purchase contract is signed, you have 3 days thereafter to kind of like consider, reconsider, pull out without giving any reason. So that will be the 27th. So you have until from today until after that, or until that cool-off period, to actually pull out of the deal. So after the cool-off period expires, you're committed to the deal, and you can only pull out if you have these clauses in. Okay, so why do we ask you to book in these guys in after your offer is accepted? Because what you want to make sure of is that you have these reports. So you want to know what the value of the property is and what the condition of the property is, preferably before the purchase contract is signed, right? If you don't, then make sure you get it before the cool-off period ends, because it does allow you to maybe pull out or negotiate or something like that. I would advise you to do it before the purchase contract is signed, because otherwise you have to go back to the notary again to get anything changed. So get these guys in ASAP. Book them in the day after. Most likely they'll come a few days thereafter, and then you get the report most likely before the purchase contract is signed. I got a question from Roberto. Is it possible to have the appraisal during those 3 days and know the outcome? So Roberto, what we want to advise you is get them in after your offer is accepted. Then you'll have most likely the report before you even sign the purchase contract. If not, then make sure you get the report before those 3 days ends. That should be doable. Yeah. Okay, so this is the timeline of buying a home. It might support you in your process. So this is a bit of a skewed period, right? It can take weeks, months of actually finding something and getting an offer accepted. Depends a little bit on what is on the market. Then you book the appraisal technical inspector in. Then you sign the purchase contract. You have the start of the mortgage application. I wouldn't wait to talk to a mortgage broker before until then. Talk to them already now, because they'll help you understand what you can offer or what you can borrow. Then the cool-off period ends 3 days after the purchase contract signing. Then there's a period of about 4 weeks where you can get your mortgage approved. And then once the mortgage is approved, then waiting begins a little bit here. And then you have the statement of completion, which takes place 7 days before you get the keys to the property. It's kind of like a final invoice. Like I mentioned, you have the purchase price, and then on top of that, you have your purchase cost, right? Now deduct the mortgage off that, and then like what is remaining is the purchase fee. So these need to be paid before you get the keys. The statement of completion reflects what you still owe the seller. In this case, the notary will have the bank account where you can transfer to. Then you go to the property for a final inspection. Make sure that it's still in the condition that you last saw it in. Then you get the keys. Then you sign the documents at the notary, or technically it's the other way around. First you sign the documents at the notary, then you get the keys. If something were to break or not working in your first week, you have the option to inform the selling party about it, right? If it breaks, it could be bad luck. If it's not working already when you move in, it probably wasn't when you moved or when you got the keys. The longer you wait though with that, the more difficult it becomes to prove that it's already the case when you got the keys on that day of transfer. So make sure you don't wait until 2 months, but technically you have a liability term of about 2 months, right? But again, use your property and inform the selling party as soon as possible if something is not working that should be working. I got a few questions. So also one question from Roberto: what is the max time period between mortgage application approved and keys handover? This depends a little bit on when the selling party wants to move out. So the selling party has a strong influence on what the end move-in date will be, the transfer date will be. So let's say they've bought a new house, but they need some renovation done, or they are waiting for their new house to be delivered, or so on. Then most likely that will be leading. So it could be anywhere from weeks to months, depending on what you're what you've agreed on. Is it the mortgage affected by deadline or something? So a mortgage is not necessarily affected by deadline, but if you have a finance clause in your offer, then it could be that 4 weeks after the purchase contract signing, you have to get your mortgage approved. Otherwise, you can't pull out anymore with that clause. So there's a little bit of pressure there, but most mortgage brokers and banks will actually secure a mortgage for you in several weeks, in 2 weeks, maybe 3 weeks max. Okay, so that is the timeline. That was actually the end of the presentation. I really sailed through that. I know I talk fast. So if you have any questions, now is the time to ask, or forever hold your so Masoud asks, can the sellers wait until the mortgage is approved? So when you sign that purchase contract, so let me go back one slide. When you sign the purchase contract here, the seller is locked in. The seller cannot pull out anymore. So technically the seller doesn't have to wait until anything, because once you've signed the purchase contract, you know that the seller will have to move forward. Question from Barry: do you pay the mortgage when signing the contract or on the move-in date? So the mortgage payments will start on the transfer date. Sometimes they start a few days earlier because it's a month-to-month thing, but often they start at the transfer date. How are expat applicants considered in comparison to Dutch applicants? Eleni, is this regarding the offer or is this regarding the mortgage? Because let's talk about the offer first. So technically, the best offer wins, right? It's not necessarily because you're a Dutchie or because you're an expat. I think that in the end, the most sellers want to earn money and have the feeling that somebody responsible move into the place. They don't care if it's an expat or a national. So I wouldn't worry too much about that. When it comes to a mortgage, then some banks have, so for example, I know that ABN AMRO has a rule where you have to be in the country for at least a certain period of time, but the majority of the mortgage providers don't have any specific rules when it comes to that. A question from Esma: what are the chances in buying a house to rent it right away? So if you do, then your house is no longer like a resident property, it's a investment property. The mortgage interest rates differ. So I would say they're about 1% higher, 1 to 1.5%, plus you would have to pay, well, you still have to pay transfer tax, but the transfer tax will increase because you're buying an investment property, you would pay 8% instead of 2%. So that's a big difference. Barry asks, what is involved in new builds? We heard that you have to pay mortgage before the new build is completed. So let me explain. When you have a new build, you have to pay for the ground first, and then you pay for every installment that they're finishing the new build. So you'd have to indeed take out a mortgage and start paying already. The upside of a new build is that you don't have to pay transfer tax. The other upside is that you have some influence in how it will be finished, and then you'll get a quality property. Right. So, but there are double costs involved. It's not the full mortgage that you have to take out and pay for, but there is partly a mortgage you have to pay because you buy for the ground, or you buy the ground and for the installments of the properties being finished. When is the timeline? When in the timeline we start paying the monthly amount of the mortgage? So upon the date of transfer, you'll start paying the mortgage. Hope that answers your question, Roberto, and also yours, Barry. Any further questions? Any sites you recommend for searching? Funda is the biggest one. Then you have Yap.nl. Then you have Fabio. Oh, sorry, Fabio. I think it's Fabio.nl. I would look into these things. Pereira's has also started offering properties for sale. So these are the websites I would look into if you're looking for homes. How can the mortgage affect it if the house is handed over after 6 months? I'm not sure what you mean, but let's say you sell the property after 6 months, then you can pay off your mortgage in full without any penalties. I'm not sure if that answers your question. What benefits does an agent give you when searching a property? Can you view houses that is not on search engines? Sometimes we get properties that are not on the search engine anymore, or are not on search engine yet, but the majority of the properties will actually come on the search engine. I think the benefits of an agent are that your offers are taken more seriously. You actually know what the value of your property is, so you don't overpay or underpay, and you have a higher chance of getting your offer accepted. Okay, so sorry, Roberto. So if the house is handed over after 6 months of signing the purchase contract, so what you need to be mindful of is that most offers of mortgage providers offer a specific period of time. So you might have to pay some extra if it's extended and you have to wait longer, or you might have to wait until you get the final mortgage offer that's a little bit closer to the transfer date. So have a chat with your financial specialist or mortgage advisor to know about that. Ooh, there's a lot of questions like that. Are you going to offer more presentations like this soon? I would like to invite others, says Desiree. Yes, for sure. Check our website. We have running presentations. So I think we have one next week. We have one the week after. Not all specifically specified to The Hague, although I must say that the amount of specific information for The Hague is maybe a little bit limited, but definitely we'll be able to share more information about the housing process, tips to win, and so on. Is there any guidance on overbidding? Yes, look at market value, Rija. Look at market value. Don't look at asking price. Look at market value. That is important. Look how popular a property is and look at your own savings and capital, because some people go nuts. I don't think you have to go nuts. I think that it really depends on what it is that you want. But have a look at the market value. That's probably the biggest tip I can give. Rupazi, is a housing agent our best bet to get an accurate market value of the house? Yeah, unless you want to do it yourself. like I mentioned, like there's two links that actually support with sharing information about sold properties in the neighborhood. But again, you'd have to kind of like do the right calculation. So if you miss that, you could easily miss it by a couple of percent, and then either you don't get the house or you get a lower mortgage because the market value is maybe lower than you initially expect. Now I sound a little bit like a scarecrow, but I don't want to do that. Still, I think there's added value in using an agent. What is the average percentage to offer over the listed price? Hey, Barry, you weren't listening. I told you, don't look at the listed price, look at the market value. So I'm not going to share anything about what you should offer over the listed price. Barry, pay attention. Market value is key. And what I know is that, for example, in certain more rural parts, the market value is very close to the asking price. So you'll see that the difference between market value and what people overbid is lower than, for example, in areas like the capital or Rotterdam or The Hague, right? Where market value is maybe further off asking price. So that's why I say don't look at asking price, look at market value. I don't know where you guys are looking to buy. Most likely The Hague could be very well a city around the city of The Hague, but there could be very big discrepancies between market value and asking price. So if I give you that percentage, then it's going to put you on the wrong foot. Are there any new construction projects in pipeline for the coming year? Send us an email, Rija, and then we'll be able to share some documentation with you about that. I don't know off the top of my head, but you can send an email to buying@ehn.works. Send an email, and then we'll actually be able to. By the way, what I'm going to share with you guys is the following. My marketing manager always tells me, Kimo, don't forget to send the intake link where they can actually book a free intake. So what you can do is book a free intake. You'll talk to one of the housing consultants, and they'll be able to walk you through the process in more details and answer kind of like specific questions like yours, Ria. So book it in for free, no strings attached. You're not paying anything unless you kind of like decide to move forward with us, and then we're of course happy to help you. I'm not sure if you can actually see my whole screen there. If you can see my calendar, it's not very GDPR, but still. Any further questions? Masoud, what if the brokers or agents ask for more money? What do you say? So that is a good question. So sometimes you submit an offer and then the selling party calls and they say, oh, we have another offer that's exactly the same, but we prefer yours. If you pay 2,000 or 3,000 euros more, then you'll get it. That is a trick. That is a very popular trick that agents use. And the difficulty is actually figuring out if they're telling the truth or not. This is why I don't really like real estate agents, because they try to kind of like have you pay more when you don't always necessarily have to. So find out as much as possible about the offers on the table before you submit your offer. So what we normally do is we call these selling agents about 5 minutes before, and then we tell them, hey, what do you have? What is realistic? This is what we're thinking. And we're always kind of like talking 10, 15% lower than what we're actually going to submit. And then he tells us a little bit more. Sometimes they don't tell us anything. Sometimes they do tell us a little bit more. If then suddenly 5 minutes later, after the deadline is expired, he calls, hey, I've got another offer, it's exactly the same, blah, blah, if you offer more, then we talk to you and we say, okay, hey, this could very well be, but chances are this or that. I know that they're using a lot of tactics to up the amount that they can get from you. Chances are slim that unless you can like have a round number, right? That's why I would always go for off number. So if a property is 495 or 395, don't offer 400, don't offer 420, don't offer 410. Go for a off number so that the chances are very much that there's nobody with that similar offer, right? So either you have a higher offer or you have a little bit lower offer. So the agent will be able to tell you that it's exactly the same. So I would look at it per case, like depends a little bit where you are. If this is your first offer and the agent calls with that, then you could say, sorry, but this is what we want to offer. If you're a little bit further in the process and you've had a few offers rejected, it might very well be. And it also depends on what kind of property it is, right? If it's your dream property and he asks for a couple of €1,000 more and you can actually loan that from the bank or you have the cash, most likely 3 months from now, the property will have increased that much in value already, right? So yeah, it's a case by case. I'm not sure if that answers your question, but still. We still have some people hanging around here. Any further questions? In general, Roberto asks, is it a good time to buy or not? Good question. I would say look at your current situation. If you're paying rent and you're planning on spending a long time in the Netherlands and your rent's high, then I would say yes, it's a good time. If you have a really affordable rent and you have a lot of space for what you're paying for rent for, and you would move into kind of like a home to buy, I'm not sure if I would do that, right? Because you maybe get less square meters, you get a higher mortgage and so on. So it really depends on what your current situation is. But I would say I'm not going to see the market stop anytime soon. And even if there would be a dip or anything like that, then you could still stay in the property because it only becomes an issue if you have to move out, right? So I would say yes, it's a good time to buy if it makes sense for you personally, financially, and if your rent is high enough to kind of like validate or argument that you could easier buy. So yes, I'm happy that I bought. I never heard anybody say, "Oh, I'm so glad I didn't buy 20 years ago." So I'd say if you buy it for a little bit longer, for at least 5 years, and make sure that you don't go nuts when you offer. Question from Barry, very specific. The expected growth in the housing market for the next 12 months in The Hague. Are you relating to price or what are you relating to, Barry? Ooh, okay. So while Barry is coming up with whether he's talking about price or anything else, I've got a question from Ria. Do you see any impact on the global housing market issues impacting NL, like China is facing issues now? Oh, I really like that question. Why? Because like everybody's waiting for maybe another crisis, right? You never know where it's coming from, and maybe it was COVID, maybe it's something else. What we're seeing happening in China at the moment is that they've pumped so much money in the system that some of these companies pretended to be too big to fail, like for example Evergrande, and because they have so much outstanding debt, if they fall over, that's going to impact their ecosystem, and their ecosystem is quite big, and their debt is also quite big. It's like $240 billion. So what do we know? So I would say China is not going to let Evergrande fall, right? Because it's going to impact their reputation. First of all, it's going to impact the local market as much as the international market. So I don't think they're going to do that. However, I've never been very good at predicting what China would or would not do. Maybe they'll use it as a warning towards other companies in the country, but I don't think they're going to let that happen. They're already kind of like taking steps, and they've been very quiet on what is going on there. But that is just one case, right? So we don't know what the after effect of the pandemic will do, of course. There's a lot of money flooding the system, so I think that that will drive prices for the foreseeable future upwards. Afterwards, though, somebody will have to start paying the bill, and either we cancel out like debts like internationally or something like that. It's very difficult to gauge that, but I think what we're going to see is we're going to see a increased period of time with low interest rates, and we're going to see maybe inflation go up. And if I know one thing, what happens if inflation goes up, then like the assets price will also go up. So house prices will go up. Gold will most likely go up. I'm not sure what's going to happen with crypto because I don't think it's necessarily linked to those cycles, or maybe it is. But I would say that the global housing market is currently responding quite well to the pandemic for homeowners, of course, and for home buyers. We're seeing a lot of people flood towards that. I think that we want to look at more maybe at the national level initially, and then macroeconomical. Again, that's not something you can predict. It's very difficult. Even if, for example, Evergrande would fall, maybe there's so much in the housing market or in the financial markets that nothing would happen, right? So I find it very difficult to gauge, but I think that you're safe for the foreseeable future. If not, then you still have a house to live in. So it only becomes an issue if you have to foreclose or you have to sell because of that. So again, I would, I could spend a lot of time talking about this, but I don't think that that's like Evergrande fall, or that we'll see any kind of like major companies like that fall in the near future. Barry, we're looking at buying, but need to know what we're missing out on for not buying immediately based on market price. That's tricky. So if you look at it like that, I think that we'll also see double digits in the next 12 months in the Hague. So it's going to be 10, 11, 12% because it's just ramping up at the moment. So what are you missing out? I wouldn't necessarily look at it like that, because then you've missed out on a lot of percentages over the last 5-10 years. So what I would look at is I would look at the process itself. Start, right? If you're confident about buying, if it makes sense for you, if don't look at it just as an investment, look at it as whether it's going to increase the quality of life, right? I think that should be key, because it's not wholly owning a home or buying a home. I think that renting is just as honorable, and if you can live with it, you can still save some money and you have a pleasant time. You also have flexibility, right? When you rent, you don't have that much flexibility when you buy. So I wouldn't look at it just from an investment point of view. Look at it, will it increase my quality of life? Will have maybe more space or a nicer place or something that I can just manage and feel at home myself? I would look at those key elements first. Then the second is, depending on where you buy, of course, is it a good location? Will it improve, for example, my time to work or the facilities and amenities in the area? Look at that first. Look at something. Can you find something you could like to buy, and then go for it or don't go for it? Don't just look at, okay, how much money are we missing out if we don't buy, right? Because if you make a forced decision and you're not happy with it, then you'll have to live with it. If you make a decision and you're happy with kind of like the house that you're living in, even a little dip is not going to help. It's not going to turn that feeling around. And then like the increased value is just a bonus. Last question, Barry. We were buying our first home here, so looking at way to get into the market until we can buy bigger, so our location value is key. Would like to move up in the housing market in 2 years. Is this realistic? Yeah, it could be realistic, but don't forget housing price in 2 years. If your house increases in value, then most likely other housing price will also increase in value. What I would do is I would look for something that definitely can increase in value, and then maybe in 2 years I would move out a little bit more, because that's where you can actually capitalize on the value, right? Because the square meter prices in the cities might increase a little bit more in the next foreseeable future versus some of the more rural areas. So I would approach it like that, or buy in another country. That could also work. I'm considering buying in Spain. Who knows, right? But then it starts paying off. But if you buy in, let's say, The Hague, and you move within The Hague, then the added value is not going to be that much. So yeah, I think definitely build up equity in your current house. There's no capital gains tax. You don't have to pay any fine. But the only thing that's maybe good to take into account is that you pay that purchase fees, right? So you have to at least make sure that your property value increases by at least 5% to earn that money back. So in 2 years, yeah, that's realistic for sure. You're welcome, guys. I'm going to wrap it up. Thank you very much for your time. Have a lovely day, and you know where to find us if you want to schedule an intake. And otherwise, good luck with your housing search. Bye bye.